Notice the upsloping trend line right here and the flat trend line right here. Notice how they're converging. One of the beautiful things about technical analysis is when two trend lines converge at the same point and price comes into it, it's as close to the perfect trade as you can get. Nothing's perfect in trading. We know that. Technically, we can lose. We can always have a chance of losing, but this is as high a probability setup as you can get.
Bitcoin failed to break the 25,000 price resistance, which shows more downside to come before the next rally. Yet, opportunities always go in every month if you're a swing trader or want to enter and exit the markets quickly. According to Gareth Soloway, founder of InTheMoneyStocks.com and VerifiedInvestingCrypto.com, which we love to watch on the channel due to his bullseye Bitcoin price predictions, there are some opportunities right now on the table if you're looking for some quick profits. Remember that this is not investment advice. You should do your diligence before taking action and only invest money you can afford to lose. But according to Gareth, if the price he calls is reached, this is the perfect trade for Bitcoin. So pay close attention until the end and share this video with your friends and family who can benefit from this information. First, let's look at the macro and the S&P 500.
Yeah, so what the S&P 500 is showing, and you can see I have basically just two trend lines on my chart here. That's all you need right now. What you're watching for is which way does this wedge pattern break. So this is a classic wedge pattern in technical analysis. Notice we're hammering on the lower end. We're right there now. My guess is you're going to get a little bit of a bounce up, and then you're going to roll over and break to the downside. That break probably coincides with the bigger break to the downside we just talked about on Bitcoin, where we could head to about 18,000 and change. Now, if I'm wrong and we rally back up and we touch this 4160 level and we break above, now you're in the case for another leg up on the S&P 500. I don't think we test the all-time highs, but I think we could easily trade up, at minimum back to about 4,300. But right now, I am favoring a small bounce both in Bitcoin as well as the S&P, and then a bigger rollover maybe a week from now or so. So number one, we're seeing the futures. You mentioned the jobless claims coming in a little bit worse than expected. Amazing how bad news is good news, right? So more people had to file for unemployment. More people lost their jobs. The markets are like, yay, that's essentially what we're seeing, which is a really messed up view, but that's what the markets want. The markets want weak data, so the Fed doesn't have to raise as much, right? So that's what we're seeing here. We saw that weaker data. It's causing the dollar to drop. That's telling us that the Fed is just ever so slightly less likely to raise interest rates in the future for the next few meetings. Again, they're still going to likely raise 25 to 50 basis points on the 22nd, but it's what are they doing after that? And right now, the weakness in the dollar is good for the market.
And this is Gareth's biggest fear.
So this is my biggest fear, right? And you're right. I think the markets are thinking, oh, this is going to be a real quick thing. We're going to go back to, 2%, 1% numbers on the interest rates. That's unlikely. And Powell's been actually saying that. He's been saying that, listen, in the 80s, we saw Volcker do that. He dropped rates too quickly and inflation ripped higher again. And he specifically said, I don't want to repeat the issues that we saw with Paul Volcker in the 80s. So what that means is he's saying, guys, interest rates, even if inflation's coming down, interest rates are going to remain high until the economy really cracks and I'm forced to lower rates, which again, for me, I'm looking at a multi-year recession, although I don't think it's going to be a depression. It's going to be a multi-year kind of crappy market, crappy economy. And that's going to basically be not so bad that the Fed has to cut rates significantly, but again, not enough to bring down inflation below the 2% mandate.
How is Gareth looking at Bitcoin right now? And what opportunities is he looking at?
With Bitcoin anyways, we know that the Silvergate kind of collapse has occurred over the last week or so, or 2 weeks. That's obviously put pressure on the crypto markets. And then we also know Powell came out with very hawkish testimony. Interest rates are now expected to rise 50 basis points. And that's been putting pressure on basically stocks as well as cryptocurrencies. Now, if you remember last time I was on with you, we talked about how I thought it was unlikely we would break 25,000 and instead we were going to roll over. That's exactly what's happened. Today, I'm going to go slightly bullish in the short term. And again, this is a swing trade, but look at the support here. You have support here and going all the way back to here. You should get some sort of technical kind of relaxation or a little bit of a bounce off of this level. Now, this isn't a long-term bullish call by any stretch. This is more of just over the next few days to the next week. I think we do see a little bit of a bounce in cryptocurrency. Look at Matic, how oversold it was. right into this here technical level. Look at the bounce that's starting here. You probably get a bounce back to about 118 to 120 on the Matic chart. It's a beautiful one.
Now pay attention to the opportunity incoming for a perfect trade for BTC.
It is. That's basically, if you go back to November when we started to hear about FTX collapsing, that was the FTX collapse. And then what I love about this is it shows how the beginning of a collapse turns out to be the resistance point on the way back up. So we came back up in this beautiful surge. We kind of hammered on it multiple days, finally breaking through, retracing again to that level, and then retracing again to that level here for really the second time on the way down. Now, the one thing I will say is that you have to look at the difference between the macro strength of a trend line and the micro. So what's more powerful? Is the trend line more powerful now, or was it more powerful the last time we hit? And the answer is it's less powerful now. It would be what I would call a minor trend line. So minor versus major. It was major here because it had just broken through and it was retesting that breakout. Now it's hitting again. It's becoming a little bit weaker. So in general, minor trend lines, what you expect is for a small bounce before a breakdown. That's exactly what I'm expecting here. So folks, what I'm looking at right here is I think you retrace off of this support at around 21,500 back to this blue line right here. And again, that's around 22.8, maybe 23,000. Then be very, very careful, because I do think you're going to get another bigger rollover where we take out this support and you can head down to 18,000 and change. Now, 18,000, I'm a huge buyer of crypto. Notice the upsloping trend line right here and the flat trend line right here. Notice how they're converging. One of the beautiful things about technical analysis is when two trend lines converge at the same point and price comes into it, it's as close to the perfect trade as you can get. Nothing's perfect in trading. We know that. Technically, we can lose. We can always have a chance of losing, but this is as high a probability setup as you can get. So if you flush down to about 18,200 or so, that, my friends, is a major level for a buy on Bitcoin.
And finally, by comparing the Wall Street cheat sheet and the psychology of a market cycle, we can see crazy similarities. Look at what Gareth has to say about this.
That is. And, I've gone on record saying that we haven't put in the lows on Bitcoin yet. I still think we're headed to 12 to 13,000, maybe as low as 9,000. And I think the culprit of that is going to be a recession in the global economy that basically makes people not want to hold stocks. By default, crypto is going to get caught up in that initially. So I do think that there is more downside, and I think that that is the likely scenario. And notice how long that took on that chart that you're showing. It took a long time. So part of it is going to be that it's dribbling down, but it's also going to just kind of break investors' willpower. And that's the normal kind of scenario here for what happens with stocks and charts in general.
Powerful content, right? If you're enjoying our videos, please leave a like and subscribe. It helps YouTube understand that you want to see more and notify you more often. Also, we're open to suggestions, so if you want to see other experts in the channel, please comment below. Thank you for watching. See you tomorrow for more Daily Crypto.